Quick disclaimer, these videos are meant for educational purposes only. Anything said or shown in any of these videos are personal opinion and my perspective. Trading carries a high level of risk, so anything done is your responsibility. Okay, welcome to the Mentfx Private Mentorship. So, we've learned a few things about demand zones, a few ways to spot them, how to see them, how to continue drawing them, etc., etc., etc. Now we're going to talk a tiny little bit about refinement and go a little bit deeper right now in regards to just demand zones. So before we do that, before we refine anything, before we talk about anything, let's look at just random examples of demand zones and just draw them all on. So you can see one, that this happens everywhere at all times consistently, and it's just looking at demand zones right now to start with. So what we're going to do is we're going to delete all this, as simple as that. We're simply going to go back here, and we're just going to look at all demand zones on this way up that were valid and were created valid. Okay, so you have this down move, okay, which means that you have this as a high. When price broke, closed above this high, you had a demand zone formed from this high to this low, and that was a demand zone. This right here was a valid demand zone, and as you can see, delivered beautifully. Phenomenal. Now inside of that, this is where it gets a little crazy. You also had this down move, okay, and when it broke this high through that down move, that was a demand zone. So what you're noticing now, and you're going to learn all about this, is demand zones within demand zones, right? And you can see how price interacted with the demand zone, how it set forth the bullishness, but then it did have a mitigation, and then it ended up taking off. Now notice how that all happened within the creation of and before the validation of this demand zone. So this should slowly already show you, as I'm just showing you examples here, that yes, demand zones can happen within demand zones. They can exist before demand zones are validated. Just because you're looking at this high does not mean it has to be that high for a demand zone to be valid. This is where you might have a little bit of personal preference to wait for this high instead of allowing these to act as demand zones. But that's completely valid, right? If we start looking inside of here, if we keep watching, right? If you follow the breaks, the wicks, follow until the break, that, right, is a demand zone. You can notice how it interacts. In this case, it goes, instead of taking off instantly, it mitigates and then goes. That's a demand zone. You have another down move, same thing, breaks above, that's a demand zone, okay? And you can see it happens off of this demand zone. Then again, price comes down, breaks above, that's that type 1 demand zone, right? So you can see that I'm not sitting here just randomly like giving you 10,000 different things. You guys should all be able to recognize now that these are all the same thing occurring, right? You can call this a type 1 demand zone, this a type 2, and further than that a type 3, and then one that gets like updated or whatever, type 4 if you wanted to. It's not necessary, but it might help you in the beginning, right? So for instance, this right here would be considered what? Well, that one would be considered a type 3 because it's just playing inside of it, right? This one right here, this initial break one right here, right? Remember, it came from this down move here and it had to be updated a few times. That's a type 4, right? So you can literally draw this. You could say this is a type 3, this one in here is a type 4, this one right here, right, that's type 2 because it was that type 2, this right here is a type 1, this right here is a type 1, right? Why? Because down candle, instant candle up, right? That's a demand zones right here, right? And you expect it to now go and remain above this point. Excuse me, I apologize for that. But yeah, so you can see you can label the demand zones and the numbers and the types that they are, but this is really all the same principle, right? I hope you're all seeing that. And as we keep following it, right, very simply, down candle, right, gets updated to that high. There it is. And you can see in some cases they're going to overlap, right? In this scenario, you have this candle, which is a down candle. You take the high, it gets updated to this high. So that's a type 4, but inside of it, you also have this down candle that got validated with that same candle, right? So this candle right here basically validated a type 1 demand zone, which was this one, and a type 4 demand zone, which is that one, right? So it created this demand zone right there and this demand zone right here. And at that point, right, if you were just entering, let's say, at the close of this candle or at the demand zone, well, you now have a choice because you have a few things showing you, right? Where if you wanted to be more protected, you would throw your stop under this low. If you want to be less protected, you'd throw it here. And you could also enter on limits here and whatnot, right? But this is just showing that you can have easily at any given point, demand within demand, consistent demand, all this stuff, right? And that's perfectly fine. There's nothing wrong with that. You can have demand within demand consistently, right? We can look a little bit more left here. Here's one of those type 1s where it's that down move, trades through, creates that demand zone. And again, this is the zone, but from that point, you're already expecting it to go bullish. So what do you know that you can do inside of here? You can either start watching for new demand zones or drop down a time frame and look for new demand zones, right? And what happens? Well, lo and behold, you have a down move. It breaks and makes out a demand zone instantly. Draw it to the low, that's a demand zone. Look what this one does. You expect instant bullishness, and instead, it does mitigate it and then goes. This is a demand zone. This is how you can think about it, right? And again, why is it valid? Well, because this was a candle break above it. And you have this down candle. You draw the high in, right? The high fails to break, you draw in to the next high. The high fails to break, you draw in the next high. Look what happens, breaks, makes a demand zone. Where's that demand zone? From the high that broke to the very low, draw that out, that's a demand zone now. And once again, the expectancy is that price is either going to keep going, which means that you can start using this time frame or lower time frames to follow this demand zones or demand chain, whatever you want to call it, upwards, right? Or you can wait for price to come, mitigate, and then you can keep following it, right? And then look what continues to happen. Price makes this high, then makes this high, makes a demand zone, and again, you can just keep drawing these in. It's a demand zone. I mean, in this case, it fails, but that's fine. It's part of the game, and you're going to learn that this is not the only concept we use. Down candle gets updated to this one, breaks, makes a demand zone, and once again, you have a demand zone from here to here. There it is. Notice what happens, okay? Takes off, fails to keep going, comes to mitigate those positions, takes off. The exact same thing. And look what happens when it comes back. Makes a type 1 demand zone, right? Based on the things we just discussed. Price comes in, trades above, makes that demand zone, and once again, you have this as a demand zone, and notice what happens. Price takes off and does make the move, but in this scenario, it also comes back, creates that mitigation, and then begins to move. And then again, you have a down move, and then you update it to this candle, and then it breaks, which means this became a demand zone right here, right? You find it to the lowest low, and once again, you can expect the longs or for price to come into it and then go. Now, this is a good example. This isn't a good example here because we haven't worked through this yet, but this is still a valid demand zone, and it worked out very, very nicely. Now, just because you have something that's very important is that demand, like these are all valid at all points. Just because a new one is formed does not make the prior ones invalid, okay? But you're going to learn later what does invalidate demand zones and when to stop really caring about the potential demand zone because it's no longer, or supply zone, because it's no longer part of the underlying story. That's not what we're dealing with right now. Right now, we're just dealing with being able to spot them and understand them before we even look at refinements or whatnot, okay? So those were all demand zones. Again, you can look anywhere, okay? Right now, all you're doing is you're finding a down candle, drawing in the high, okay? Waiting. In this case, it didn't break, so you update it to this high. And then at that point, that becomes a demand zone. So from there to the lowest point becomes your demand zone. And again, the expectancy is that price will either, from this candle right here, will either continue expanding because now bullishness has come in through the fact that you've validated a demand zone, or come back to mitigate and then keep going. In this scenario, we go, go, go. And that means that on this time frame or lower time frames, new demand zones will of course create new setups. So again, you can do this again. Find the down move, find the most recent one, draw it in, wait. Is this break a body break? No. Draw in the new high. Is this break a body break? No. Draw in the new high. Is this break a body break? No. Draw in the new high. Is this break a body break? No. Draw in the new high. Is this break a body break? Yes, that's your demand zone. From here to the lowest low, draw it out. That's a demand zone. Notice what happened. At that point, it should expand or mitigate and then expand. In this scenario, it mitigates and then expands. It doesn't have to do that, but it does. Now notice something else that's very interesting. In the creation of that demand zone, look at this down candle, draw the high. That's also a break and close above. So at this specific point in time, this became what we like to call a type 2. This became, a type 4 because it updated so many times. This becomes a type 4 and a type 1, right? So you can see both of those demand zones being true. This is its own demand zone right here. There it is. And so is that candle there. Again, giving you a potential strategy or a potential idea as to where you can protect a low if you were to enter some kind of long, either off of the zone, protect the low, or off of the up candle, right? Because again, that's going to skew your risk to reward in your perspective, in your favor, but that's something to talk about later. Then again, you get a down move, trades through the top, right? breaks. That's one of those type ones as I looked at up there, which means that from there to the low is a new demand zone. And from there, what should happen? Price should either expand due to the fact that the footprint has now been left, or come back and then expand. And lo and behold, it expands and goes, right? Now we can wait for the same thing, okay? You have a down candle, you draw in the high, okay? You draw in the high, price breaks up, makes a new high, but doesn't close. So you make this the high. Next candle breaks and closes above. Therefore, from the high to the low is your demand zone. Price should do what at that point? Expand from here, or mitigate to expand. Price mitigates and expands. Exactly what we look for. And you get another down candle. You draw in that high. Price breaks, doesn't make it through the high. You draw this one. It breaks and makes it through the high. That is a valid demand zone from here to here. What do you expect? Price should go or mitigate and go. It mitigates and goes. In this case, it doesn't go a lot, but that's not what we're learning right now. We're just learning about how to use zones. Okay, great. Looking for the next one. Now you have, you could try, because maybe you're confused. You're like, oh, how do I do it? Here's a high, right? It gets updated, gets updated, gets updated. And at that point, you'll notice, crazy enough, this move here created a demand zone from here to here. Wow, kind of crazy how that worked, right? Just by finding this high. But then at the same time as this being a demand zone, which is valid, you also have this high of this down candle. And that made it an instant demand zone right then and there. And look what happened. Price broke. And again, you expect expansion or mitigation than expansion. In this case, it expands, mitigates, and expands. And on the mitigation plus expansion, it creates that other demand zone. So that's a very, potentially for you, a powerful sign. Again, all things we're going to work through later, but I'm just showing you what demand zones look like and how to just stack them. Because remember, this is only the first ingredient. This is like the egg, and we haven't even dealt with all the other cake elements right now, okay? And again, you have that expansion, which is great and phenomenal, and you have another down candle. You can draw in that candle there, and if you did, this is the break and validation of that demand zone, and this becomes a demand zone on its own, right? And then what happens from there? Price expands, and then comes back to mitigate but fails through, so that's not important. But then at the same time, find another down candle inside of there. There it is. There's a break. Here's your down candle. Draw that out. You expect expansion or mitigation than expansion. Look what price does. It mitigates by touching and coming into the zone, and then expands. Phenomenal, right? Telling you a story of what's going on. Now again, follow any down candle. Really, you can follow any down candle, okay? And you're going to learn this over time. And this concept right here, like for you to find this down candle and go like this is what I call a Mentfx block. I'm going to teach you that later, so don't worry about it now. But right now, I want you just to focus on the last down candle, right? And then if it keeps breaking down, then find a new down candle. If it keeps breaking down, find a new down candle. If it keeps breaking down like it does here, find that down candle, right? Breaks, doesn't follow through, update. Breaks and closes, therefore, there you are with your demand zone. At that point, when price is already here, you expect what? Expansion or mitigation and expansion. What does it do? Expands, expands. In the expansion, what does it do? It makes another down candle. Mark the down candle's high, update it, wait for the break. Break occurs from the high to the lowest low that it was at, from that high, okay, from that candle, I mean. What do you expect? Expansion or mitigation than expansion. Look what it does. It expands, it then mitigates that exact zone, okay? And then it expands. And then it continues to expand. And in this continuation of expanding, what traits of price do you continue to see in regards to what I'm teaching? Find a down candle, draw it out. Once it breaks, take the down candle to the low, draw it out. What do you see true about it? We expect expansion or mitigation than expansion. It mitigates and expands. How does it mitigate and expand from there? Take a look. Down candle, put the high in. Breaks, creates a new demand zone within a demand zone, or it'll do this everywhere. Price does what from there? You expect expansion or mitigation than expansion. At all these points, what do you think is going to happen in here? You're going to get a lower time from confirmation, or even here on the hourly, down move, draw the high, breaks. You expect, well, now you have a demand zone. You expect price to now do what? Expand or mitigate than expand. Mostly actually expand, not mitigate, because like I said before, expansion is much more likely. When you have a zone, it's not a zone to be traded off of, but it can be, which is why we understand it, because we can confirm it in the future or whatever it might be. But what's important to understand is that when a demand zone is validated, it's telling you a story. And that story is that the footprint has come in and that the price wants to go in a certain direction. So once that's been told to you, The market wants to expand or mitigate then expand, but more likely expand. And guess what price does from there? Or from the demand zone creation, it expands. And again, you have the same thing all the way up. Continue following it, okay? And this is going to happen on all time frames. Go to a 4 hour, do the same thing. Go left a little bit, right? And just do this with demand zones initially if you want to, and just find them, okay? Just find examples, because it's going to be the same thing over and over again in any markup, in any move up, okay? You can find a down candle, draw it in. Okay, here it is. We found a down candle, draw it in. Okay, boom, gets updated. Boom, it breaks. Great. We take the high to the low, draw it out. What does it do? We expect expansion. In this case, it mitigates, then expands. Now, at the same time, you have this down candle. Draw this high in. What do you see? Breaks, does the same thing, fails to go, draw this one in, makes a new demand right there. After it had created what? This demand here. What does it do after this creation? It mitigates, then expands. Okay? Then again, you have a black candle. You take the high. Another black candle. You can take this high if you want. Another black candle. You can take this high. Do it with all of them. Walk yourself through it. With this high, it breaks and creates the demand zone. Where's the demand zone? Right here. You expect what? Price to continue and expand. What can it also do? Mitigate then expand. What does it do here? Expand. Now, if you were using this candle, look what happens. Price makes a high, a wick, draw it in, breaks. Where's the demand zone? From here to here. Draw it out. What do you expect? For price to expand. What can happen? It can mitigate then expand. Well, you know, it can also fail. Those can happen for all of them. But generally, this is how we think about the markets and think about direction and think about how that happens. Why is that all happening? For the exact reasons explained right above here, where we discussed how orders are entered into the market, and we drew all those things, right? Yeah. When we discussed how orders enter into the market and why they enter into the market, okay? These are all demand zones. They're validating a specific thing. They're showing the footprints of something that's occurring. And notice how it happens on every single time frame. So if on a 4 hour, for instance, very quickly, okay, if on a 4 hour, a lot of you should be able to follow along with this very easily now. If on a 4 hour, sorry, my thing fell. If on a 4 hour you have this down candle and you draw this high, okay, you simply wait. Is there a demand zone here yet? No, we wait, okay? Is that a demand zone? No. Okay, we wait. Is that a demand zone? No. Instead, it now updates the high. Great. We'll use that high now. Boom. Right? We'll just move this. We're using this high now. We're waiting for the break. Does it break and close? Yes, it does. Therefore, your demand zone is from the high to the low. Draw it out. Now, what can happen? Price should either A, expand, or B, it can sometimes mitigate then expand, or it can fail, but we don't care about that because we understand trends, which means that now, if you very simply follow the same setup on a 1 hour or 15 minute, you can get a trade, right? Because now you're starting to stack potential confluences. So if I go to a 15 minute now, and I ask you, what do you see? Okay, you have a down move, put the high in. Did that expand over it? So we can go one more back here, just for the sake of explanation, okay? Did that make a demand zone? Yes, right? Here's your demand zone. So what can you do right now? You can set a limit order, stop under the low and look to expand, or because you understand what demand zones are, you can take the entry, throw your stop under, and look for the expansion, okay? Now, price does whatever, we don't really care about that, but now you already have a precedent set for what this zone should be doing, and notice what it does. It mitigates. Now again, where's the down candle? Right here. Can you use that? Yes. Look, is there another down candle? Yes, right here. Can we use that? Yes, let's draw that out. Did that validate a demand zone? Yes, from this high to this low. At that point, what can you do? You can set a limit order here for the mitigation, then the expansion, or you can set it there because you understand that it's likely to expand. This could be your trade. Now, similarly, if you use this as the down candle, you might have waited now. Here's another down candle. Look what happens here, okay? This down candle gets updated to this one, okay? And then validates the move or creates a demand zone. So now the demand zone is created from this high to this low. And at the same time, there's this down candle, which has created its own demand zone, kind of literally stacked right on top of it in that same area from, again, this high to this low. So can you enter a trade off of this? Yes. Can you enter a trade off of this? Yes. And those are powerful trades and you can take that long because now there are things that are stacking up. Now, again, this is not a trade plan. This video is not a trade plan, nor is it telling you this is how you should trade. All it's doing is showcasing how demand zones work. Now again, it fails, does whatever, doesn't matter. Keep following the system. There's a down candle, draw this high in. What does that put us at? Puts us at this one. That's one of the demand zones that is currently doing what? It's forming. What does it do? It breaks, fails to break. That's your demand zone high now. It hasn't formed yet, fantastic, but that's fine. During that time, you also had this down move. Draw that candle in. It expands and breaks and closes above. That's a demand zone. At that point, what can you expect? For a expansion or a mitigation, then an expansion, you can simply set up the specific that you want to see it, mitigate and then expand, or simply set up the buy on the completion of that candle that validates the demand zone, because again, a demand zone is showcasing that a footprint has happened and that prices want to go in that direction without needing to come back, and that can be your trade. And this is how you simply milk markets, right? And then you get your expansion. And again, this is going to happen over and over and over again across time frame to time frame to time frame. All you need to understand is how the demand zones function, at least given these 4 ways of thinking. And notice how they all exist within each other. They can all exist at all times. And okay, that's great, phenomenal. Let's move on to refinement in 1 second, where we're going to talk about some even more crazier stuff. So let's get into it.